This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on October 21st, 2016. Our time is 8:47 Mountain. Radio show runs on 6:30 CHED in Edmonton. Normally we are on Sunday afternoon at 3, but today it's a big day. The Edmonton Oilers are Oilers playing the Winnipeg Jets at 1 p.m. We're on prior to the face-off show at 11:30. It's the Heritage Classic outdoor game. Investors Group Field. It's going to be our Oilers playing the Winnipeg Jets, home of the Blue Bombers, and good luck to our Edmonton Oilers who have started off the season so well. And Winnipeg has a good team. We have a good team. It should be a great Heritage Classic. Don't forget, if you ever miss a radio show, they're archived on Harold's two websites, HESradio.com and RareColoredDiamonds.com. Podcast through iTunes, and we got some good news this week. 630 CHED has been added to Apple Music. So if you subscribe to the service, Apple Music, you can listen to 630 CHED and you can hear our radio program. Connect with Harold at RareColoredDiamonds.com. RareColoredDiamonds.com, 1-800-432-1022. That's 1-800-432-1022. In the second half of the show, we'll talk about diamonds. Our featured diamond of the week is a .53 carat Princess Cut Fancy Intense Yellow Green. I love green diamonds, and this is a beauty. See it at RareColoredDiamonds.com, featured diamond of the week. Before we get to Harold's commentary, some interesting news. Big central bank assets jumped the fastest they have in 5 years to $21 trillion. The world's biggest central banks are bulking up their balance sheets this year at the fastest pace since 2011's European debt crisis to boost lackluster economic recoveries with asset purchases that are supporting stock and bond prices. The 10 largest lenders now own assets totaling $21.4 trillion, a 10% increase from the end of last year. Data collected by Bloomberg shows. Their combined holdings grew by 3% or less in both 2015 and 14. What does that mean? Central banks printing a lot of money, buying bonds. They're keeping stock markets up, the bond market inflated, and that is a very positive thing, Harold, for hard assets. And they had the debate earlier in the week between Donald Trump and Hillary Clinton. They were asked about the debt and the deficit, and really they were told both plans that they had were only going to increase the debt and deficit by massive amounts of money. United States in debt, $20 trillion, running deficits of $600 billion, close to $1 trillion as the years continue on. Really, they have no game plan to get this deficit and debt situation under control. That is a positive, Harold, for hard assets going forward.
You bet it is. But again, at this particular point, let's not lose sight of the fact that the U.S. is the only country that can raise interest rates, and their dollar is the strongest currency at this particular point. So as we're taping the show on Friday, we're looking that the U.S. dollar is trading at 98.65. It's up another 35 points. So it looks to me like eventually that the Federal Reserve is going to raise interest rates and the U.S. dollar is going to skyrocket. You know, at this point here, we're trading just below par. Par is at $1, so we're trading at 98.65. And if that sounds confusing to you, let me just explain that the U.S. dollar is the reserve currency of the world. Oil's priced in U.S. dollars. Commodities are priced in U.S. dollars. Almost everything is priced in U.S. dollars. So basically, the U.S. dollar is the reserve currency. The U.S. dollar trades against a basket of foreign currencies, the Japanese yen, the euro, the British pound, the Canadian dollar, the Australian currency, and the Japanese yen. So you take an average of these currencies, and basically when the dollar is up or down, when I say the dollar, I'm always talking the U.S. dollar, when the U.S. dollar is up or down against in the market, it's against a basket of currencies. So at this particular point, we've been recommending very strongly to get out of Canadian dollar-based investments because the Canadian dollar will continue to fall and get into U.S. dollar-based investments. We have private investments that our Canadian clients invest in that are all U.S. Based in U.S. dollars. And the reason that we do this is because the U.S. dollar is going to continue to rally strong. In fact, we're very close to breaking par in the dollar. And back in the 90s, the highest level that the U.S. dollar got to was 110. I believe that that's going to happen again and happen within the next year. U.S. dollar that's trading above par at the 110 level against the Canadian dollar, as an example, which will trade at the 160 to 170 level. By the way, the Canadian dollar as of today is at 133. What it basically means is that your buying power with the Canadian dollar is going to fall further and further and further. So at this particular point, if you were to go from Canada to the United States and you wanted to buy something, it would cost you $1,333 Canadian dollars to get $1,000 in American. So you have to spend $1,333 in order to get $1,000 American. So that shows you how much stronger the U.S. dollar is at this point than the Canadian dollar. It's almost identical for the Australian. The euro is down to 92 cents. The British pound is down to 82 cents. The Chinese currency is at par. The Japanese yen is in disarray. So basically, you want to be out of Canadian dollar-based investments, and you want to get something into the U.S. dollar, because if I'm correct, and I'm positive that I am, the U.S. dollar will be worth 40 to 50% more than the Canadian dollar. That means that my clients that are sitting in U.S. dollar-based investments, not only do the investments go up by 20, 25% a year, which I know sounds extreme, but they're not. On top of that, my clients get paid in U.S. dollars, which at this point is adding 30%. Soon we'll be adding almost 50% to the bottom line, and that's what we've been saying for the last 5 years. Get something into U.S. dollar-based investments. You know, with interest rates basically trading at zero and soon to be going into negative, all throughout Europe there's negative interest rates, and there's no doubt that negative interest rates are coming to Canada and the United States eventually. But the fact is that with interest rates at these levels, there's no way that unless you have a ton of money sitting in the bank or in a retirement savings plan, that you're going to ever be able to retire. Because the fact is, it used to be that we used to make 10% return on our money. So you could put your money into a CD and get 10%, and if you were going to retire, let's say you had $500,000 sitting in the bank, you could live off of $50,000 a year. But not anymore, because now if you have $500,000 in the bank, you're only getting less than 1%. You're getting 0.5%. So what are you actually making? $2,500 a year on a $500,000 invested. Nobody could survive on that, and nobody can retire on that. Along with that, if you have your money sitting in retirement savings plans in Canada, I'd say 90% of the people are upside down on the retirement savings plan. Nobody's made money in that market for 10 years now. And with the markets the way they are, with the real estate market, the oil market, and the Canadian dollar so weak, the chances of making money in a retirement savings plan in Canada is slim to next to none. 90% of the people that trade the stock market lose their money, and 90% of the people that trade commodities lose their money. So the fact is that with interest rates sitting at 0.5% and going lower, what is a person to do? How in the world do you invest your money and be able to get any type of return on it today? And in fact, in most cases, because you're not getting any money in the bank, by keeping your money there, it forces people into the stock market to try to get a return. And as I mentioned before, 90% of the people that trade in stocks lose their money. So where does that leave us? Just so you know, I'm not trashing the Canadian dollar, and I'm not trashing Canada. I'm a proud Canadian that is born and raised in Canada, and I've been doing this radio show for close to 20 years now. But the information that we give on this radio show is the information that our listeners and our clients need in order to make an intelligent and informed business decision. And again, if you're expecting that anything is going to change over the next few years for you. It's not. If you're sitting in stocks or mutual funds, you're going to lose your money. If your money is sitting in a retirement savings plan, you're never going to be able to retire on that money. And if your money is sitting in the bank, you've got even bigger worries, because not only are you only getting 0.5% return in interest, which means after taxes and inflation you're actually losing money, but recently, within the last 2 months, the Canadian government has approved a bill called C-15, and amongst other things that this bill is involved in is one of the scariest situations as a Canadian you will ever discover. Basically, the Canadian-owned banks, which are owned by the government, have now allowed, with this new bill called C-15, it allows bail-ins. What that basically means is that there are bailouts and there's bail-ins. A bailout is what the U.S. government did in 2008 and 2009 when that mortgage problem happened and all the banks were going under. What the U.S. did is they printed a ton of money and they bailed out the banks, Citibank, Bank of America, all the major banks and insurance companies and everything got bailed out. That's where a lot of that debt has come from. However, after that, in Cyprus, and I think it was 2013 or 14, they allowed something that was called a bail-in. It means that one of the major banks in Cyprus got into trouble, they were almost insolvent, and because depositors are looked at as creditors because they're paid interest, what the bank was allowed to do was steal the money, take the money of depositors in the bank and use it to pay off the bank's debts. That's called a bail-in, when they use depositors or creditors' money to pay their own debt. And what did the bank give them in return for stealing their money? They gave them worthless shares in a bank that was going under. And you know something? Nobody did anything about that. And I remember doing the show with Randy, and we were so appalled by this bail-in situation and saying that this is only the start of it, because when people didn't riot or break into the bank or do whatever anybody would do when their money is stolen, basically they were passive. They didn't do anything. And that set the precedent for what's happening now. So now they in Canada, they passed this C-15 bill, and the Canadian government, who owns the banks, is saying that we're not going to allow bailouts. We're not going to bail out the banks if they get in trouble. We're going to allow bail-ins, which means that us as Canadians, if you have, let's say you've got $500,000 sitting in the bank, you're insured only up to $100,000. So if that bank goes under, they're going to take $400,000 of your money and pay off their debts with it and leave you with $100,000, which is the only insurance that you have. If you don't know what to do, if what I'm saying to you catches you at a time that you've never heard this before, you need to contact me. Let me explain to you what this means to you, what you have to do to get around it, and then I'll talk to you and explain to you how my Canadian clients are making over 25% return with me per year, and they're making it in American dollars. I know it sounds high, but the fact is that this is something that we've done with our clients for many, many, many years. And again, just so you know, that my clients in Canada have been instrumental in my company getting to where it is today, 15, 20 years later, and this is payback for my clients. So my clients are getting paid in American dollars, and they're making over 25% a year. If you want to find out how to do that, and you want to find out how to get around these bail-ins and everything else that's happening, just give me a call. I'll spend as much time with you as you need and explain what your options are and what our private investment programs are. But again, at this point here, Randy, the American dollar is rallying very strong. It's going to break par very soon. The Canadian's trading right now at 133, but I think it's going to trade at 170 to 180, and we've got plenty of time to do this. We're going to make a fortune in the currency markets, and the currency markets are markets that I've traded for over 30 years. I understand those markets well, and my clients have made a lot of money by converting Canadian to American when the time is right to do so.
The Bank of Canada left our interest rates unchanged at 0.5 point. They actually considered cutting. And if they had cut, I think we would have seen the Canadian dollar really go down and the U.S. dollar go up substantially. So at this point in time, it looks like the Fed is going to wait in the United States to raise rates until after the election. And here in Canada, they're holding steady, although the bias seems to be towards a cut. And that is a recipe for a lower Canadian dollar and a higher U.S. dollar. And if you'd like to get some money into programs when you can start making money immediately today, speak with Harold. 1-800-432-1022. The call is free. Anything discussed, 100% confidential. 1-800-432-1022. Harold's website is rarecoloreddiamonds.com. We're going to talk about diamonds in the second half of the program. Our featured diamond of the week is a .53 carat princess cut fancy intense yellow green. One of the most beautiful diamonds on the planet, museum quality. See it at rarecoloreddiamonds.com, featured diamond of the week. You're listening to the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We are on today from 10:30 to 11:30 a.m. prior to the Oilers and Jets game at 1 o'clock. The face-off show at 11:30. It's the Heritage Classic outdoor game, Investors Group Field in Winnipeg, home of the Blue Bombers, hosting our Edmonton Oilers and Winnipeg Jets. Good luck to the Oilers. There was a story came out this week. It's in our free weekly newsletter. If you'd like to get our newsletter, Speak with Harold, we'll be happy to send it out to you via email free of charge. You can spend about 5-10 minutes going through this newsletter, be completely up to date as to what's going on in the world, financial and geopolitically, or you can spend hours. It's really up to you. You'll be on the same page that Harold and I are on, see all the same material. We send it out. It's absolutely free. So get it from Harold, 1-800-432-1022 or rarecoloreddiamonds.com. But a shocking story. The euro will collapse as it is a house of cards, warns the founder of the euro. You heard right. A warning from Otmar Issing, the founder and creator of the euro, in an extraordinary interview on Monday. In an explosive interview with the Journal of Central Banking, Professor Issing says one day the house of cards will collapse as the European Central Bank, ECB, is becoming dangerously overextended, and the whole euro project is unworkable in its current form. The founding architect of the monetary union has warned that Brussels, the dream of a European superstate, will finally be buried among the rubble of the crumbling single currency he designed. Realistically, it will be a case of muddling through, struggling from one crisis to another. It's difficult for anyone to forecast how long this will continue for, but it cannot go on endlessly, he told the Journal Central Banking in a remarkable deconstruction of the EU project. But a stunning, and we can send this story out to you, a stunning note from the founder of the euro that it will collapse. And I remember when the euro first started, it was about 87 cents, and Harold recommended that our radio listeners invest in the euro. It went to, if I remember, the peak was around 160, and there were people that made a lot of money. But Harold, during that time, I gave you credit, and I give you credit now for saying, and this was well over 10 years ago, that the euro eventually would collapse. And I have to admit, I was a little skeptical at that time. But as time has played out, you were right.
Well, again, I've traded currencies a long time. The biggest winner in the currency markets coming up for our clients is definitely in the U.S. dollar. That's something that you have to do, because otherwise you're going to sit back and watch what's happening and just get absolutely annihilated in the marketplace and see. Well, just like, for example, what happened in Britain with Brexit. Those that didn't do anything saw the currency drop by 25% in one day and basically lost 25% of their net worth. We don't want that to happen to our friends and listeners and clients to our show. What we need at this point here is to be proactive. The thing is, in any investment, the first thing that we look at is capital preservation, going into an investment that you're not going to lose your money. Second of all is capital appreciation. We all want to make returns on our investment, but the fact is that that's not happening today. Most people are not making any money investing their money at this particular point, except for our clients. And again, our clients have been in these trades now for 4 years in most cases, and again, we're getting paid in American dollars, which is extremely important. The other thing that's going to happen short term is that gold is going to drop. Gold's probably going to drop to around 1,100, 1,050 in that area over the short term, just because the U.S. dollar is getting so strong. There is definitely a correlation between gold and the U.S. dollar. For example, back in the 90s when the U.S. dollar was the strongest currency, gold was at $250. Consequently, in 2011, when the U.S. dollar was extremely weak, down to 72 cents, the gold market went to 1,900. We caught that entire move. So again, everything is related to the currency markets, mostly the U.S. dollar. If that's not something that's in your repertoire at this particular point, you need to contact me because, again, we're making a lot of money in the market and we're getting paid in U.S. dollars, and that is going to continue for a long, long time. So again, at this particular point, conventional investments like stocks, bonds, real estate are not great investments at this point. And the banks are going to get in trouble in Canada because of the oil market, the real estate market, and the Canadian dollar. So what we need at this point is a new strategy, and alternative assets are the way to go. Not assets like stocks where people are losing 90% of their money. So again, at this point, you need to contact me if you want to learn how to trade into currencies and start to make not only on the investment, but make money on the currency also. We'll certainly show you how to do that.
One of the interesting stories this week in our newsletter, Irish bookies already paying out $1 million to people who bet Hillary Clinton would win the U.S. election. And they did it back in 2012 as well. So they're pretty convinced that it's going to be Hillary Clinton in office. Our featured diamond of the week from rarecolordiamonds.com. See it. We'll talk about diamonds in the second half of the program. Is a .53 carat Princess Cut Fancy Intense Yellow Green. It is a beauty. See it online. rarecolordiamonds.com. Featured diamond of the week. As I touched on off the top of the program, at some point, hard assets will fly. And I agree with Harold. Gold, at some point, is going to pull back to a level where we want to get in. But now is not the time. But at some point in time, fairly soon, you're going to see this market take off due to all the debt and the deficits around the world. Central banks, $21 trillion. You have the United States in debt, $20 trillion. And it doesn't matter if it's Barack Obama, Hillary Clinton, Donald Trump, more red ink for a long, long time. In fact, the budget deficit increased $587 billion. That's what the U.S. government ran as a deficit for the just completed fiscal year, a 34% spike over last year after significant improvement from the record deficits of Barack Obama's first years in office. Friday's deficit news, while sobering, does not appear to have had enough of a jolt to get those in the gridlocked American Congress into action to stem the flow of red ink. It came in an annual report by the Treasury Department and the White House Budget Office. And they go on to add in another story in our newsletter, a child born in the United States comes into the United States owing more debt than the average American. In fact, under a Clinton or Trump administration, the number will only grow. Each newborn share of the national debt today is more than double what it was in the 90s. In the past 35 years, the national debt on a per capita basis has increased with each U.S. president. Under Bill Clinton, the debt grew at the slowest pace, with a net increase of 1.4% over his 2 terms. After reducing the slope of public debt in his first term, he shrunk it in his second. Under current law, U.S. inflated and inflation-adjusted debt per person is expected to reach $66,000, that milestone in April 2026. And that according to Bloomberg and the CBO, the Congressional Budget Office in the United States. And at some point in time, Harold, we have about a minute left here in our segment. debt deficits matter. They may not want to talk about them at debates in the United States for president, but they do matter. And I think I agree with you. Yes, the U.S. dollar is the place to be. Hard assets like gold, silver, and diamonds have stood the test of time and will prevent, obviously, bad things from happening in your portfolio by having that insurance policy at all times.
You bet. You bet. You know, when I say that gold is going to drop, I'm only giving you a short-term expectation. We don't trade gold. We buy gold for the long term. So the fact is that we'll have an opportunity to buy gold probably a couple $100 cheaper than where it is right now. But my long-term expectations for gold are to be over $2,000. We were there in 2011 until the exchanges where gold was traded manipulated the market down. So again, gold is a very important asset to own. I'm just saying that in the next couple months, we should be able to buy it at a couple $100 cheaper, and that would be a tremendous buy. I'm a big believer in gold, diamonds, alternative assets that are not paper. Paper at this point is the worst investment that you could make.
Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Invest in things governments cannot print. RareColoredDiamonds.com, 1-800-432-1022. We're going to come back and talk about diamonds. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on October 21st, 2016. Our time is 9:14 Mountain. We are on today, normally on 6:30 CHED, Sunday afternoon at 3. We're back to our normal time next weekend. But we're on from 10:30 until 11:30 this morning before the Oilers-Jets game. The face-off show is coming up here in about a half an hour at 11:30. The game at 1 p.m. It's a big one. It's the Heritage Classic outdoor game. Investors Group Field in Winnipeg, home of the Blue Bombers, where our Eskimos have played the Blue Bombers. Beautiful, beautiful new stadium. It will be the Oilers and the Jets in the outdoor game. Good luck to our Edmonton Oilers. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Get our free weekly newsletter. If you ever miss a radio show, obviously they're archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. We go on any portable device you have. Good news, 630 CHED was just recently added to Apple Music. So if you have Apple Music, you can listen to 630 CHED. You can listen to our radio program. Our featured diamond of the week is a 0.53 carat Princess Cut Fancy Intense yellow-green diamond. I love green diamonds, and I love this diamond. It is absolutely beautiful, and the color in it is spectacular. See it online. RareColoredDiamonds.com, featured diamond of the week. Christie's important jewel sale happened earlier in the week, October 18, 2016, at New York Rockefeller Plaza. We'll talk about that a little later in the program. But there was a great article that we have, and I would really encourage you to get it. It was called Behind the Scenes at the Argyle Pink Diamond Tender. And that ended October the 12th. We're waiting for the results. We'll find out exactly. The Argyle mine, Western Australia, has 90 to 95% of the world's pinks, and they're running out. The mine will shut down here in a matter of 4 years. They have the pink tender that goes around the world, and it's one of those things that if you get one of those pink diamonds, you are so lucky, because at some point, 90 to 95% of those diamonds will be gone. But it's a great article taking you behind the scenes of the pink diamond tender. But there's a quote that I wanted to pass on to you, because it really talks about the rarity and the scarcity of this market, and this is why we love it so much. They go on to say here, it's very unusual to find a top-quality pink diamond over 1 carat, and Harold has educated us about that for a long time. Josephine Johnson, manager of the Argyle mine, explains, to put it into perspective, retailers will often call us asking if we have a 1-carat round pink diamond, and we have to say no. We are lucky to produce 10 1-carat brilliants a year, and there are only 3 in this year's production. Only 3 for the entire world. In fact, less than 5 a year is the average. So, a 1-carat pink diamond engagement ring would in fact be a 1 in a million gift. And it's really billed as the most exclusive diamond sale in the world, the Argyle Pink Diamond Tender, strictly by invitation only. You go in there, you take a look, you place your bids, and then October 12th was the end, and then come that point in time where they reveal who has won the bid. It's secret. Sometimes we find out the names if they want their name released. Then at that point in time, they usually say that you have pink diamonds that have gone up dramatically in value from last year's tender. And Harold, that's what we're expecting this year again, some big price appreciation, because we're getting closer and closer to the end of the Argyle mine. And I love that quote that they had in this story. You know, you're talking about a 1 in a million gift if you can get a 1-carat pink Argyle, because they are so rare.
You better believe it, and that is 100% true. The fact is that to get a round 1-carat Argyle pink diamond is nearly impossible. So the Argyle mine was discovered in 1986. It was the largest producing diamond mine in the world, and it was located in the East Kimberley district of Western Australia. And this mine produced 30 million carats a year, but those 30 million carats were mostly white industrial diamonds. White industrial diamonds are used to cut other diamonds because diamonds are the hardest substance known to man, and the only way you can cut a diamond is with another diamond. So the fact is that this mine was discovered in 1986. It produces 30 million carats of diamonds a year, but most of them are white industrial diamonds, which are not used in rings or jewelry. In no way, shape, or form are investment quality. However, out of all those 30 million carats of diamonds that came out of this mine per year, came the most beautiful pink diamonds in the world. And Argyle produces 95% of them. Now, it's a tiny number. You're not talking about, that there's so many pink diamonds out there that 95% represents a huge number. It doesn't. In fact, at the Argyle tender, there's normally only about 50 or 55 diamonds that are actually brought to the tender. And these are diamonds over a half a carat, and some of them are around a carat. So you're talking about small diamonds. Argyle pink diamonds are known as the most concentrated form of wealth on earth. A quarter-carat diamond could be worth hundreds of thousands of dollars, depending on the color of saturation and all that. So you're talking about an asset that is so valuable and so rare and such in high demand, but there's so few of them. And every year, and this is going to end in 2020, but they have the Argyle Pink Diamond Tender, where they take these 50 or 55 diamonds on tour around the world, to 5 or 6 different cities, and they get to show them to us very high-end dealers or jewelers. And we can sit there, examine the diamonds in a private location, and then bid on the diamonds, only one bid on a private bid per diamond. And the fact is that over the years, my company and myself have purchased some outrageous diamonds from the Argyle tender. However, over the last 3 years, we haven't purchased anything because the prices are skyrocketing. There's only 3 years left till the Argyle mine closes. This could turn out to be one of the best investments we've ever made, because if you invest in an Argyle pink diamond and take delivery of that diamond and put it away for the next 10 years, you're talking about a diamond that can increase in value so substantially that it will make almost any other investment that you're involved in look like it's nothing. To own a pink Argyle diamond, when I said at the beginning of the show that the most important things in investing is, number one, capital preservation, investing in an asset that will not lose their money. And that is very true with Argyle pink diamonds. There are so few of them, and they're so valuable that they never decline in value. They go up by 15 or 20% a year, but the closer we get to the mine closing, these diamonds can take on a totally different light. We could see certain diamonds go up hundreds and hundreds of percent in the next few years, depending on the color and the rarity of that particular diamond and the size of it. So we're very, very excited about this Argyle tender. We're also very excited the fact that my clients, mostly Canadians, have purchased these diamonds and put them away for their future. They will do way better than any other investment that you've made. There's no stock or commodity or anything available at this particular time that will do what Argyle pink diamonds are going to do over the next 5 to 10 years. You know, when you go into a retirement savings plan and you look to put your money away for 20, 30, 40 years to when you retire, that's never going to happen for you. The fact is that in the last decade, nobody has made money in any real sense of the word from investing in your retirement savings plan. But when I said at the beginning of the show that there's two things that we look at, capital preservation and capital appreciation, the only assets that are doing that at this particular time are assets that we are offering to our Canadian clients. Pink diamonds, blue diamonds, green diamonds, orange diamonds, yellow diamonds will skyrocket in price. They're amongst the best investments you can make. They never decline in value, which takes care of the first rule of investing. Only invest in things that you're not going to lose money in. And number two, they appreciate in value, which is why we invest money in the first place. So you need to get in touch with me. We have some of the most beautiful Argyle pink diamonds, starting at around $25,000, $30,000 and going up from there. You put these diamonds away for retirement, and you'll see a return that no other investment like stocks or bonds or real estate can give you anywhere close to that at this time. So again, the Argyle mine is getting ready to close, and the reason it's closing is it's not producing anymore. They're going to close the mine, and they announced this a couple of years ago, and they've given it to 2020, which again is only 3.5 years from now. So as an investment, this is not even a long-term investment anymore, because 3.5 years is not considered overly long. If you're in your 30s or 40s or 50s, this is the type of asset you could put away for a long time. If you don't need the money, you can hand this down from generation to generation, and that's where these diamonds pick up extraordinary value. 50 years ago, 50 years ago, my wife's girlfriend's grandmother bought a 5-carat pink diamond for $50,000. My wife's girlfriend recently inherited that diamond worth $5 million. So over a period of 50 years, the investment went from $50,000 to $5 million. I know of very few investments that have ever done that or ever give you the opportunity to do that. And one of the investments is rare colored diamonds, and that's what our major business is. So again, at this particular time, we have a rare opportunity to invest in Argyle pink diamonds at a time when there's not going to be any more. If supply and demand is something that you understand, this is one of the best opportunities that we've ever had.
Our featured diamond of the week, and it is an absolute beauty, from rarecoloreddiamonds.com. If you love the color green the way I do, check this out, a 0.53 carat princess cut fancy intense yellow green. It's online, rarecoloreddiamonds.com, featured diamond of the week. We also have a picture of it in our free weekly newsletter. Speak with Harold personally and privately about investing in the different programs that he has for you, as well investing in rare museum quality diamonds from rarecoloreddiamonds.com, 1-800-432-1022, or go to rarecoloreddiamonds.com to connect with Harold. One of the events of the week, Christie's Important Jewel Sale, October 18, 2016, New York City, Rockefeller Plaza. And here are some of the results. Lot 241, a colored diamond ring set with a pair brilliant cut light blue diamond weighing approximately 5.54 carats. It's a beautiful diamond. The estimate on it was $300,000. It went, and we're rounding it up a bit here, to $380,000. Lot 42, a colored diamond and diamond ring set with a cut cornered square modified brilliant cut fancy intense blue-green diamond weighing approximately 2 carats. And the estimate on that, $150,000. Harold, I hope you're sitting down. Please sit down.
I am.
Okay. The estimate $150, it went for $367,500. Yes.
Wow.
That's what can happen in this market. Lot 122, a colored diamond and diamond ring, set with a cushion mixed cut fancy intense yellow diamond, weighing approximately 15.16 carats. The estimate on it, $200, went for $295,500. Lot 138, a colored diamond ring, set with a pair modified brilliant cut fancy deep brownish greenish yellow diamond, weighing approximately 8.63 carats. The estimate on it was $50. It sold for $62,500. Lot 232, a colored diamond and diamond ring, set with a round brilliant cut fancy green diamond weighing approximately 1.02 carats. The estimate on it, $30,000. It went double, $62,500. Lot 157, a colored diamond and diamond ring, set with a cut-cornered rectangular modified brilliant cut fancy intense yellow weighing 3 carats. The estimate on it, $30,000. It went for $47,500. And finally, lot 158, a colored diamond and diamond 3-stone ring, set with a cut-cornered rectangular modified brilliant cut fancy intense yellow diamond, weighing approximately 1.12 carats, flanked on either side by a cut-cornered rectangular modified brilliant cut light pink diamond, weighing 0.43 carats, and a cut-cornered rectangular mixed cut fancy grayish blue diamond, weighing approximately 0.34 carats. The estimate on it was $15,000. Double it, Harold. It went for $30,000 at auction. So
wow.
That was very, very exciting. If you'd like to see those auction results, we can send them out to you. October the 18th in New York City, an auction from Christie's. And Harold, some very, very good auction results. And we're not talking about $1 million to $2 million. We're talking about the diamonds that are within our wheelhouse. Somebody getting a diamond for $15,000, selling it after a period of time, a reasonable period of time, for $30,000. That is a very nice move in price.
You better believe it. Again, to be able to make those type of returns, 150, and you know the thing is that when they go to auction, the experts that look at the piece and determine and appraise it and figure out the range that piece is going to sell it. These are brilliant people. They know their business. You know, you may say, how can they predict, you know, or appraise a diamond and say it's going to sell for 150, and all of a sudden it sells for 350 or 400,000. Believe me, it's not that they don't know what they're doing. It's the marketplace. People want to own their assets. They don't want paper assets like stocks and worthless pieces of paper from a bank that's stealing your money. Nobody wants that anymore. There's more money leaving the stock market at this point. All the big money is getting out of it. What is coming into the U.S. stock markets now are basically money coming in from Europe and Asia where their investments are going south. So the fact is, people want to be in alternative assets. Items that are selling for record prices at this point are rare colored diamonds, classic cars, certain art pieces. Again, these are all tangibles, all hard assets, alternative assets to what people are mostly used to dealing in. And the stock market is no longer a safe place to put your money. The stock market is a gambling casino that 90% of the people lose in. So again, diversification is extremely important. To own assets that you hold in your hand are extremely important. Diamonds, just so you know, rare colored diamonds, they are portable private wealth. Means that if, God forbid, something happens in your country, you own that diamond. You could take that diamond with you. You can put it in your pocket or put it in a ring and go across the border, and you've got proof that you own that diamond. There's no problem. But you can't cross a border with more than $5,000 in cash, stocks, gold, or anything like that. So a diamond is not something that the government even knows that you own. In no way, shape, or form am I ever suggesting to do anything illegal or to smuggle diamonds. We don't do that. All I'm saying is that you can cross a border with a $500,000 diamond on your finger, and nobody would say boo about it. If you own that diamond and you have the receipt for it, you could travel anywhere with it, but you cannot do that with any other asset, especially cash, stocks, or gold. So, again, at this particular point, with the world the way it's heading right now, with ISIS and the problems with Europe and Britain almost going under, losing 25% of their net worth, the Canadian dollar's down by 33 points, not 33%, and soon going to be way worse than that as the U.S. dollar continues to skyrocket. You need to look at your investments in a different light. And if you just stick with conventional investments, you're going to be like 90% of the people out there that lose their money. 90% of the money is made by 10% of the people. We need to be in that 10%, and I can help you with that. My clients make over 25% a year, and they get paid in U.S. dollars, and I can say that with certainty that nobody else can do that. So, again, at this point, we're looking at there's some tremendous opportunities. You need to get something into U.S. dollar-based investments, and that's what my expertise is in.
Connect with Harold. The call is free. Anything discussed is 100% confidential. 1-800-432-1022, 1-800-432-1022. RareColoredDiamonds.com is the website. Our featured diamond of the week, a 0.53 carat princess cut fancy intense yellow green diamond. See it online at RareColoredDiamonds.com. Featured diamond of the week. 5 compelling reasons to invest: privacy, portability, estate planning, price stability, and good long-term growth. In fact, last week our featured diamond was a red diamond. It was a 0.22 carat pear cut fancy red argyle. And we told the story of the Hancock red. It was a 0.95 carat round fancy red named after the world-famous collector Mr. Warren Hancock. Hancock originally purchased the diamond in 1956 for a mere $13,500. The Hancock red was sold in 1987 at Christie's in New York for $880,000, instantly giving it the title at the time of the most expensive diamond per carat, a whopping $926,000 per carat. Hancock had been a colored diamond collector all his life, until his early death at the age of 65 in 1981. The Montana rancher began collecting in the 50s. And another story, we have talked about this before. In the beginning of the year, a lot of blue diamonds were auctioned off, one of them from the estate of Shirley Temple Black. Famous actress, became a famous statesperson in the United States as an ambassador. Now, in 1940, her father went out on her birthday and purchased a blue diamond, and that was to coincide with a movie that she was involved in that had a name that said blue. Now, the price on that diamond in 1940 was around $7,200. It was sold at auction privately after the auction for over $25 million, over $25 million. And Harold, that's the excitement of this market. And we have about 1 minute left.
You bet. An investment that was made back in 1940 for under $10,000, around $7,000, was sold for $25 million. That's what we're talking about. We're talking about putting away money for your future and for your family's future. And even though you may not need the returns from your diamonds immediately, just think about what you've done for your family moving forward buying them assets that appreciate in that fashion. So, again, I couldn't be more pleased with what's happening in the rare diamond market. Again, our businesses are doing extremely well because we're an alternative asset. My clients get paid in U.S. dollars. We expect a huge move in the U.S. dollar moving forward, and we expect the Canadian dollar to fall. We want our clients to be in a safe place and be able to make the money that they deserve to make. So, again, at this point, Randy, any of our listeners to the show can certainly call. I'll spend as much time with them as they need, go over their financial situation and explain to them what their options are, and hopefully be able to help them and get them into a good, solid position.
Thank you very much, Harold Siegel. Another great show and your knowledge.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Good luck to our Edmonton Oilers against the Jets in the Heritage Classic. Connect with Harold, rarecoloreddiamonds.com or 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.